I'd like to welcome our guest presenter for today's webinar, Heather Grover. Heather serves as Vice President of Product Management, Patient Collections, Experian Health. Heather joined Experian in 2001 and has held several roles with increasing responsibility in marketing, product management, and strategy. Her focus has been in creation, development, and launch of products. She is currently the Vice President of Product Management with Patient Collections for Experian Health, based in Costa Mesa, California. Heather is responsible for helping clients solve problems through improving existing and launching new product initiatives. So, without further delay, I'll hand the call over to today's guest presenter. Heather, please go ahead.
Thank you so much. Good afternoon, everyone. What a wonderful introduction, and thank you for taking some time out of your busy day to cover patient-centered approach to collections. In my role, I'm lucky enough to work with our clients to help them solve their problems, and one of the biggest challenges today for many of you is collections. So shifting patient responsibility, clearly this is a challenge. There's a few key statistics here that I won't read each and every one, but suffice it to say, balance after insurance for our patients continues to grow. I'll cover a few high-level points here because I think it's important in the context of our discussion today how do we have a patient-centered approach and how we can be mindful of these trends. So first and foremost, high-deductible health plans, we expect them just to continue to grow. As we all know, they're very prevalent and continue to rise. I actually saw a recent study where patients enrolling in exchange plans were polled what the optimal or desirable monthly premium price that they'd want to pay if they had a choice. And the primary answer was about $100, and that's obviously a low premium, which tells us that the majority of those patients will sign up for the plan that requires the lowest monthly premium with a high deductible attached to it. We expect that trend to continue. It's been on an upward curve, and we believe it will continue for some time to come. So the challenge is for all of you on the phone and for all of us in the industry is really going to continue to be one where we're challenged in collecting the patient portion and the fact that that will continue to rise. Also, greater balance after insurance. We are seeing, and our customers are reporting across the country, about 20 to 30% of revenues are coming from patients. And markets are predicting that this will continue to rise above those levels. And this will put different pressures on providers than we've seen. It will require an adaptation of processes and protocols to ensure that we can collect from patients in a manner that is still compassionate and that drives patient satisfaction. Speaking of patient satisfaction, that is something that is being incorporated into how payer reimbursement works. Not a surprise to many of you on the phone. Patient satisfaction is directly related to consumerism. With more pricing transparency and online tools that are coming into processes. We have more online tools, we have more informed healthcare consumers than ever before, and patient satisfaction will continue to be a driver in the months and candidly the years to come. Finally, we're also challenged with resource constraints. This is not a shock, and particularly in revenue cycle departments, in IT departments, many of us are being asked to do more with less. And this drives a lot more outsourcing, particularly in collections. And as we embark on these new areas of collection practices, leveraging new tools, new technologies, new data, to help us drive efficiencies and do exactly that, do more with less. And that we expect will be increasingly important. Regulation, a little bit of an alphabet soup on this slide. I won't read through each of these, but suffice it to say there's more and more complexity that is coming into healthcare collections landscape. 501R, very probably familiar to many of you, but also the other acts and other legislation that you must comply with, such as Fair Credit Reporting Act, TCPA, DCPA, it really adds to the operational challenge. All of the players in our space are being increasingly scrutinized from a regulatory standpoint, which requires greater use of best practices and more oversight to all participants within your revenue cycle management process. So clearly the challenge, a little bit of a build on this slide, clearly the challenge is how do you strike that balance? We all aspire to get to this balance where we optimize our ability to collect from patients, but do it in a way where we're driving patient satisfaction. And when we Experian Health within our product team, when we talk to patients, and we are lucky enough to sit on a lot of our customers' patient advocacy panels or patient feedback panels where patients provide feedback on online tools or statements or the collection process in general, we're lucky enough to hear what patients want. And we hear consistently is that patients want transparency, they want simplicity, and they want options. They want options both in how they're communicated with, so we all use our cell phones, some of us, including myself, sometimes too much. Texting is a common method of communications, and patients want more of this. They still want ways to call you, and there are still folks that want to get their paper bill. One of the interesting things we've seen feedback on is in terms of millennials as a patient segment and how they want to be communicated with and what satisfaction looks like to them. And before seeing this, you may think that they only want to interact via phone, particularly mobile phone. But we're seeing the feedback is that millennials really are omni-channel users. They kind of use a little bit of everything. They respond to text messages, but they sometimes pick up the phone and call, and many still want that paper statement. So having that flexible ability to communicate with the patient on their terms is really an important satisfaction driver. Also, options relating to payments. Patients want flexible patient payment plans and transparency in that process. And really, transparency can mean a number of things. It can mean understanding their bill, understanding what their payment options are, and getting information presented to them in an easy to understand manner. So we look at the way patients feel the process works today. So this slide depicts, you can kind of see on the left-hand side, what we see as the patient's view of the world when they're interacting with a provider in a patient financial engagement scenario. You have all different types of patients, different ages, stage of life, different family structures, different financial dispositions. And by and large, a lot of you today go above and beyond to create a very personalized clinical process for the patient. But normally when they enter the financial engagement area of the provider, we see this funneling down to really a, well, I'll say in quotes, kind of a one-size-fits-all approach. And so normally when they arrive, we know some things about them, maybe their insurance, their copay, their coinsurance, and maybe their previous balance, but that's about it. Once we use that information and triage them, they go through a standard pre-service process. And in the post-service area, when we look at the collections process, everyone is treated the same way. Maybe we send statements at 120 days or maybe later, and if there's any remaining balance that exists, we send to a partner collection agency at that point. But really there's not a lot of, typically what we see, not a lot of customization at the point they enter in the organization. So at Experian Health, we really believe the way to change this is to leverage data to increase patient satisfaction and to leverage a data-driven approach to bring insights to this process. And that's what we're going to talk mainly about today. What are the different ways to use data sources available to providers in the marketplace, how to get a better understanding of who that patient is, and how you can reach them, and how to optimize that interaction and be centered around the patient, really a patient-centered approach to collections. And we'll talk about how that data can be used pre-service, point of service, and even post-service to optimize the revenue cycle. So there's three main data types that we see providers using in the industry today. First, a credit model. Second is a behavioral data model. And then third kind of category is the demographic model. So we'll go through each of these and discuss some of the pros and cons of each. So let's start with the very top one, the credit data model. We all use credit data in our daily lives. It's really the basis of how our country operates from a retail perspective. It's how we obtain our homes and cars, and is aggregated from financial services daily by the three main credit bureaus. And that's ultimately boiled down to your credit report. Each individual has a credit report. And one of the things we also do is use healthcare payment data from our customers and infuse that into a model. So there's a healthcare credit score and a retail credit score. And one of the reasons why this is important is that many people pay healthcare debt last. This is not a shock to many of you on the phone. And that may be very different from how I pay my other bills. So we see a very different health credit score than my other scores. I may pay my mortgage on time, my car payment on time, and have an 850 credit score, but I may not pay my healthcare debt until I get that first collection notice. So some of the benefits of using credit data is that it is very precise, it's person-specific, and it allows you to get a very clear picture of that person's financial disposition. It's also real time. We're able to see rapid change in the credit score of a person were to lose their job, or if they are suddenly unable to pay, or if they become able to pay. And so some of the negatives, it can be a bit more costly than other models, and it has a higher no-hit rate. So for example, people under 18 won't have a credit score, or you may have people who pay cash or are new to the country, and we may not be able to create a score for them. So let's move on to the behavioral model. These are basically using a patient's past payment history to predict how the patient will pay in the future. And these models can be very useful. It is account level specific and may be very good in areas where we may not be able to develop a credit score. The challenge with these is that they require a fair amount of historical data to tune correctly. They also don't change quickly. If a person were to be at a good job and then maybe they lose that job, or from a healthcare standpoint, for some reason they're not able to work, it may take us about 3, 4, or 5 times to see them not paying for that to show up in the model. Let's go to the third, which is the demographic model. Demographic data can be compiled from a number of sources. A great deal is marketing type of data, and it's usually at the zip code level. And it will tell you that all people that live in a specific geography or zip code generally have the same financial disposition, and that's translated into a score. The pros is that this has a very high hit rate. You can pretty much score generally everyone living in that zip code. The downside is it's not as precise. You can have a wide array of people living in a zip code and have inaccurate information for that person. And so we believe the optimal model, and the reason that this is circled on the bottom, is the best way to use data and drive insights is to use all of these sources for an optimal approach. So I want to give a few other ways to look at data sources. We kind of talked about some of the pros and the cons, but I think visuals are always really helpful. So this slide is of a cartoon of a neighborhood, and it's showing a specific zip +4 area. You can probably see 75206 actually in Dallas, Texas. And all the homes and the people living in those homes would be treated with the same financial disposition. And if they showed up in your hospital, they would pretty much look like they may have a high propensity to pay based off of the zip code. And they would be treated as highly likely to pay and be handled as such. But if we were to look at these homes maybe with credit data, well, a little bit more information here. On an individual basis, you'll see a wide array of different types of scores, that people would have with additional data using credit data. So now you may see a no-hit. You may see a no-hit or maybe lower scores, and that's something that we may see in a credit-specific model. But this is a real-world example. This is a model. This is a map of our Dallas, Texas area, and this is an area where neighborhoods are a bit older, where many of the homes were built in the 1960s. And maybe in one section, on one street, you have 3 generations living together and struggling to make ends meet. Maybe a lower score, or they're 200% of federal poverty level. However, you have people maybe on the next block that are buying 2 of those homes, leveling them, and building kind of a McMansion or a much larger home. So in the demographic models, those 2 scenarios, the 3 generations and the McMansion example, would show those households being the same. If you leverage the additional data sources we just talked about, credit being one, that gives you the ability to separate that. And we certainly want the ability to supplement a credit-based model with demographic information, especially in scenarios where you may not be able to develop a file for the patient. It gives you some information on what that patient looks like. Okay, so how do you use and operationalize all that data, pre-service, time of service, post-service, to really optimize, personalize, and really be intentional with the way you engage with patients? So we'll walk through several ways this can be leveraged, but one thing I want to mention, that this information can flow through and permeate throughout the organization. So if I don't mention it, it's certainly possible it can be used in many workflows. I think folks think of collections as post-service, but let's open our minds and think about it at point of service or pre-service as well. So let's look at the first one. So we can use this data to segment patients that may have a high propensity to pay, but maybe won't be able to pay that high deductible health plan, $10,000 deductible. Maybe it's a large accident and they may not be able to pay that bill. If we know in advance that that patient may not be able to pay, let's offer them a payment plan that they can be compliant with. And that can be offered through a patient portal, through a text message, or presented to a staff member to have a meaningful conversation with the patient. Excuse me. So number 2, we're increasingly seeing patients wanting the ability to self-serve in their interactions with their provider. So we're helping enable customers to offer patients their own payment plan based on parameters. We include some guardrails, but also enable patients to modify plans or add accounts to their plan. And this is something they can do on their own without having to wait for someone to call them back and set up the plan. We also target monthly payment plan options that fit within the patient's ability to pay without stressing their household. That payment plan capability can be leveraged by presenting to a staff member, can be done in the checkout process, or done in a pricing transparency tool and create estimates. And if you want to give patients ability to prepay, you can leverage that data before they even come in for their service. And how you present these offers, payment plans, financial assistance, that really can drive satisfaction. Patients want to be communicated with on their terms. Certain patients want email, others want text, others want paper statements. And particularly in financial encounters where a patient may not necessarily believe that they may even qualify for charity care, this is key. 5 and 6, really making sure that these things have transparent, simple, and visible to patients and staff members is critical. Making sure patients, and staff understand where they are in the aging process. That really can help drive behavior. So if a patient learns that their account is about to go to collections, that can really drive them to act. And helping them understand benefits, especially high deductible health plans, is a huge factor in patient satisfaction. And then finally, number 7, really being compassionate, having a strong collection process, but also driving patient satisfaction. There are people who come into the organization who can't pay, have a financial stress, and may be under the federal poverty level percentage, and we know in advance of them even arriving that they will qualify. If you knew that, you'd likely want to extend an offer to the patient through a text message or other type of communication to say, we believe you may qualify for a financial assistance program, and allow them to pre-enroll. That type of interaction and communication really drives up patient satisfaction scores as it relates to the charity process. And regardless of where these data points, payment plans, charity applications, whatever you're going to leverage to be really precise and intentional in your interactions with patients, workflow really matters. And I can't stress this enough, and many of you are probably nodding your heads in agreement. It might be the most important thing in the presentation today. If you were to look at the bottom left corner, put a shot of our application that we host, and the bottom right is our patient portal dashboard. But regardless of the vendor you're using for data sources, if they have their own workflow tools, it's critically important that the right data gets to the right person, whether that's the staff member, the patient themselves, so they can navigate the process for the strategy you're recommending for that patient. You know, it's also important to understand with your data provider what their ability to integrate with your system or your practice management system. And the organization that invests millions of dollars, a few names you see here, and the desire of the organization is for users to work inside those systems. If your data partner can't integrate into your system workflow, that data is not going to be in the right spot at the right time, at the right interaction. So I encourage you to ask your data providers inside your strategy, understand their capabilities of your partners with their own tools, but also how that data can be integrated. Okay, so that covers where we'd use the data in our process, pre-service patient portals and such. Now let's look a little bit more about how to leverage this data in the collections process to be more customer friendly and improve collections overall. So data can be leveraged to improve efficiency of your staff and how they collect on patient balances, but that can also drive patient satisfaction. And the first way the data can be used to improve efficiency is to just make sure that the accounts your staff is trying to collect on are patient due balances they can collect on. So you can run through an AR cleansing process, an accounts receivable cleansing process, where you take an accounts receivable file and run it through some of the same data source we just talked about to make sure that the accounts are truly collectible. So what you see here, this is an example of a file, an accounts receivable file that's been cleansed, and pretty typical of what we see from a provider. About 70% of what's in an AR file is truly collectible. The rest of the accounts are probably things that belong in charity that weren't caught on the front end as patients that would qualify. By using this data on the back end, we see that these patients should be moved through the financial assistance process. So a big portion of the AR file, typically 8 to 12%, where patients are in the file are as a self-pay balance, they actually have insurance, and that can be Medicaid, Medicare. We see a lot of commercial insurance, and there's a lot of reasons for that. Patients may come in uninsured, and they start working with a financial counselor to get enrolled in Medicaid. As you know, Medicaid takes 30 to 60 days to complete their process, but they make that coverage retroactive back to the data service, so you have 2 or 3 bills in your system prior to coverage being attached. And by scanning accounts against state Medicaid coverage, classify those accounts and bill Medicaid. There's that ability also to scan for commercial coverage, so perhaps the patient presented in the ED and we didn't get correct commercial coverage. We may be able to classify those balances as correctly covered. And we also see patients that are bankrupt, and obviously it's not legal to collect from those patients. There's also, unfortunately, the scenario where we have deceased patients that can also be excluded, or that can be used to route to those accounts to specific processes, maybe to legal collections or other processes. So really netting out the noise, let's say noise in quotes, for your staff or accounts that go to agencies really can help you optimize your process. So after we go through that, we net down a true collectible accounts, looking at how we put people, I'll say people in buckets, probably the most descriptive term, that can really drive very personalized approaches to their buckets. This is one of the most important things that you can do to drive performance in collections and ensure sensitivity to patient satisfaction. So what this chart depicts, let me give you kind of a quick review of what this shows. On the top axis are score numbers. That's our healthcare score, and on the left is balance size. In pre-service, we may not know the balance, but after they move through the process and we know what the balance is, we know things like the balance after insurance is paid. We know that balance size is a big factor in how patients pay or not pay. And the way segmentation is different from just a score is it really takes more data into account, and it takes those variables and puts them into different buckets. And we're taking the high profit accounts all the way down to really the people on the left-hand side in the red. Those are the people that no matter what you do, they just simply don't have the ability or willingness to pay. So what this chart is telling us is if you have people who are working on a descending balance strategy, where they start with the highest dollar accounts and they work them all the way down to the lowest dollar accounts, they're ignoring a lot of accounts where they could get paid. So as you can kind of see in the upper right-hand corner, the segments 1s and 2s, really those are your most profitable accounts. And if you're not focusing on those accounts, you can really get paid with a bit more time, energy, and focus versus focusing on those patients that candidly just simply won't pay. And the other thing this tells us is even within a very tight score band, so we're showing here a score band of people with a healthcare score of 600 to 649, you're seeing, you may have that score and you're using some data in your process today, but you're not really segmenting the data with other variables. You may have 3 different strategies within that band, so segment 1, 2, and 3. Patients with a balance of under $100 are your best payers, right? Others that range from $100 to maybe $5,000 may act like other segments and may need to be treated like segment 2. So those are the patients with really high balances. Even if they have a really good score, they may not always be able to pay. So using additional data can help us drive additional insight on how to treat patients and workflows. A little bit of an eye chart here, so I won't necessarily review all of it, but by using some of the segmentation information that we just reviewed, we can really tailor a patient-centered approach to each of those different segments. So for example, segment 1, that may be your best payer. You may not really even try to touch that patient until maybe day 40 or day 75, or you may even try to not even contact them for some time. Those are your best payers. Whereas your segment 5, you can see a lot less activity here because what we're recommending is that that patient really is not likely to pay. Maybe send them a first statement, another notice, and then you send them off to collections, just because our experience has been over time, those patients really are not going to pay, no matter how much you'd like them to. And being able to also tailor this and tweak it and refine it over time is critically important. So what we really hope is using some of our data sources and being able to tailor it to the customer based off of their own experience. You can transform this experience to this experience, one where you're driving patient satisfaction and really improving your overall process from a workflow and FTE and cost perspective. So with that, those are the prepared remarks that I have. I think we can open it up for questions.
Thank you, Heather, for sharing these insights with our audience. A lot of engaging information. So before I take our first question, I would like to just remind everyone to type their questions into the questions chat panel located to the right of your screen, and we will take as many as time will allow. The first question I will address is about copies of the slide and the recording. So you don't have to wait for the slides. That's something you can gain access to right now. Just look over to the right below where you submit those questions, and you'll see something called handouts. Expand that and you'll see that PDF icon, so you can get that right away. And we will also follow up with a link to the replay, so you can either view it again or share it with your colleagues. We will make that available. And we also got a question about CPE. So if you are an HFMA member, make sure that you have if you're sharing the, watching this with others in the room, make sure that everyone in the room has submitted their email address, and you'll see how to do that once we conclude the webinar when you're routed to a survey, and you'll have that opportunity to type everyone's names in. If it is for non-HFMA, this course will qualify just because of certain factors, being able to address questions and being of educational and content, so we can help you with that as well. All right, so one of the questions, Heather, that has come through is, how do we apply these tools that you've discussed in a pre-service or point-of-service stage in the process?
Yeah, that's a great question. So there was a mention earlier in the presentation. I think a lot of folks think of collections as really being post-service, but we have a number of clients that are using tools in a pre or a point of service to collect from patients. And I'll say, depending on hospital policy. Now, I think that's really an important point, starting with your organization's policy around pre or point of service collections and ensuring that you're following that. But a number of our clients use, I would say, two key factors. One is a propensity to pay score to determine to what extent they're asking for payment from a patient pre or point of service, as well as federal poverty level percentage calculations that can be used to determine if a patient can qualify for charity care. Those are, I would say, two key things that our clients are using pre and point of service, as well as enabling their financial counselors to have those conversations with patients.
All right, thank you for that. Well, it looks like we've exhausted the questions, but if you have any last minute that you think of, feel free to send it through as I just share some brief information about what's coming down the pipeline. Region 8 has another webinar installment scheduled for November 14th at 11 a.m. Central Standard Time, so make sure you keep an eye out for session and registration details. As I mentioned, you will be automatically, I can't even talk. You will be automatically routed to a survey at the end of the webinar. So be sure to share your thoughts about the session. If there are specific topics that you would love to see in a platform like this, let us know, and we will corral subject matter experts such as Heather to share some insight with you guys on this platform. All right, we have another question. What are some successes we can expect to see from targeted collections?
Yeah, great question. It varies depending on the client. I would say that many of our clients have seen successes in a number of ways, depending on where they utilize the tool. So maybe in an early out process, they may see that their collection partner is collecting more in the early out process. Some of our clients are actually using some of our tools to segment out highly likely to pay patients and are keeping those longer in-house to be worked, where they send out less likely to pay patients to their third-party agencies. So in that scenario, they're seeing lower payments to their third-party agency in terms of percentage of collections. We also see, depending on how they're utilizing the products and the data, higher collectability. Just overall, we track ROI for our clients, and just higher overall collection percentage in terms of unit yield, lower costs in terms of FTE, cost avoidance in terms of statements being sent out. And we also integrate with some of our dialers, with a couple of specific dialers where we can see just improve overall contactability, as well as lower costs in terms of contacting patients. But broadly speaking, higher unit yield, better collections, lower costs.
Very good. Thank you for that. And our next question comes from Janine. She is referencing, there was a slide that you had where you listed certain software such as Epic, Greenway, etc. Are these ones that you have already developed interfaces with?
That's a great question. Yes, we've actually integrated into all of the partners that you see on that slide. We also have the ability to integrate with many others, but those are ones that are integrated with the products that we're referencing here. Yes.
Perfect. Yep, they're coming in now. So our next question comes from Susie. She wants to know, how do you feel about speaking to patients prior to physician appointments on date of service? Any thoughts there?
I think that there's, based off of the client conversations that we've been having, I think that that's a changing, that's a trend that's changing. I think a lot more of our clients are having conversations prior to service, partly because it's something that they want to be able to set expectations with the patient, but even more so, patients are asking and wanting to better understand their care, not only their care, but what they can expect to pay, and they're shopping more. So I think that that's not just a trend in terms of something that we as an industry are driving, but something that patients are driving as well, trying to be much more informed before service.
Great, thank you for that. Susie also circled back, just adding that, even with their policy in place, providers tend to have a difficult time accepting the business aspect of things, which
yes,
I think she's not on an isolated island there for sure.
No. One thing we've seen our clients do is agree that some of the physicians do have a challenge being able to keep it simple, and being able to direct patients to informational websites has been a great tool, such that patients can get their questions answered depending on the service and or coverage questions. So we've seen clients utilize that. It really helps physicians not only they provide education to their patients, but also helps them feel a lot more comfortable in the process.
Perfect. All right, we are down to the last two here, I believe. This one comes from John. He asks, do you ever collect actual incomes from patients?
Actual income.
I wasn't sure about that one either.
Yeah.
I can circle back, John.
So I think maybe the question, maybe a question, and maybe John can add some more context as I'm speaking. But one of the things that we do see in terms of qualifying for charity care or financial assistance programs is collecting information on income through W-2s. And so yes, we do see that through the application process, that's certainly something that is needed. We actually are working on a tool that can do that in a more automated, patient-friendly way through things such as image capture on phones and such. So while it's an application process that can be a little bit tedious at times, either face-to-face with the patient in a financial counseling session, we're working on ways to be able to capture that information as part of the application process, but do it in a much more automated way.
Very nice. Thank you for that. And then our final question comes from Becky, I believe. Hold on. Before I jump to Becky, John just sent a note, he's saying getting income information to help define the
Yep.
amount of monthly payment a patient could
Mm-hmm.
afford in either a
Yes.
payment plan or a loan.
Yes,
Okay.
that's absolutely something that a lot of our clients do, is to ensure that that patient payment plan isn't providing kind of a stress on the patient. We are able to do that. We look at a few different data sources to model estimated income before providing not only estimated income, but also looking at their other financial obligations. So to ensure two things: one, that the patient isn't paying more than they can handle, but also making sure that the patient's not requesting a 20-year patient payment plan for $5 a month. So really being able to make sure that we meet both ends of that spectrum. But yes, we use a number of data sources to be able to provide that.
Perfect. Thank you for that. And then Becky wants to know if you can offer some scripting books or tools.
Scripting books and tools. So through a number of the partners that you see here on the screen, we do have a number of workflows that are developed already. Some of our other products, we also offer a consultant that really helps tailor the workflow to the client's process, as well as make recommendations around best practices, which also leverages sample scripting and such. So absolutely we do provide that, and with a number of the partners that you see here on the screen, they already have a number of workflows that are pre-built to help drive some of that activity.
Wonderful, wonderful. Okay, I think we have exhausted our incoming questions. There were a couple that were around cost, and I'll forward those directly to you. I know that can be sensitive information on this type of platform. But yeah, I think that takes care of everything. So Heather, thank you so much for joining us and sharing this information with
Thank you
our
for the
audience today.
opportunity.
Absolutely. We were glad to have you. So on behalf of Region 8 HFMA, I'd like to thank everyone, the members as well as the entire healthcare community for joining this call. As I said, keep an eye out for a promotion on the November 14th webinar, which will go out pretty soon. And enjoy the rest of your day, everyone. Thanks again for joining.
Thank you.